Good evening, class. Good evening, everyone.
Good evening, sir.
Okay. Today, we look at tax return. After we are looking at tax return, we also go back to review. We will go back for us to review our personal income tax. We have to go back to review our personal income tax. That is what we are going to look at today. In the past, have you looked at this tax return before? The tax return, have you looked at it before? I don't think we have looked at this topic, tax return. So it's part of the topic we need to cover. It's part of the theory in taxation, theoretical aspect of taxation that we should cover. Hello? So we are going to look at tax return. What is tax return? How do we file tax return? What are the type of tax return? That is what we are going to look at in this class. Like we all know, tax return, they are tax return is a form on which a person or organization presents an account of income used by tax authority to determine the tax liability. What that means is that tax return is a report prepared by a taxpayer containing the information on okay. You can't hear me. Can you hear me?
It's breaking.
It's breaking. Okay, let me use my phone. Hello, can you hear me now?
It's echoing.
Can you hear me now?
I think it's better.
Okay. So what we mean by tax return? Tax return simply means what the reports prepared by the taxpayer containing information relating to the tax affair of that taxpayer for a given period for the purpose of complying with the tax law. The report submitted by the taxpayer containing information on the tax affair, on the taxpayer affair over a given period for the purpose of complying with tax law is called tax return. The accounts that show the summary of tax paid by the taxpayer submitted to the tax authority at the end of every year, it is the tax return. This tax return, taxpayer normally submit it annually, monthly. It depends on the type of tax return. Taxpayer normally file the tax return annually, monthly. It depends on the type of tax return. So the first type of tax return we are going to look at is personal income tax return. Personal what? Income tax return. Personal income tax return. Personal income tax return can be divided into two. Personal income tax return can be divided into two. Personal income. This return is filed to the State Internal Revenue Service. Taxpayer paying personal income tax return is going to file the return to the State Internal Revenue Service. And there are two types of personal income tax return. Number one type of personal income tax return is called pay as you earn. Number one type of personal income tax return is called pay as you earn. It is the personal income tax return filed by the employer on behalf of employee. While number two type of personal income tax return is called direct assessment. Number two type of personal income tax return is called what? Direct assessment. It is the return filed by the self-employed persons. Those who are into self-employment, they have their own handwork, they are professional, or sole proprietorship or partnership. They will file a return called direct assessment. Personal income tax return, like I said, is divided into two. Pay as you earn and direct assessment. Pay as you earn, payee. These are the returns filed by the employer on behalf of who? On behalf of employee to the State Board of Internal Revenue. Pay as you earn is a return filed by the employer on behalf of employee to the State Board of Internal Revenue. This pay as you earn can be filed in two ways. The pay as you earn can be filed in two ways. Annual payee return and monthly payee return. Pay as you earn, we can file it in two ways. Annual payee return and monthly payee return. Annual payee return, it is the personal income tax return filed by the employer on behalf of employee at the end of every year. And this type of return must be filed not later than 31st of January of the following year. Annual payee return of 2024 must be filed not later than January 31st of January of year 2025. Failure to file annual payee return by employer is going to attract penalties of 500,000. Failure to file annual payee return by employer is going to attract penalties of 500,000. What are the content of annual payee return? What are the content of annual payee return? Filed by the employer on behalf of employee. Number one content of annual payee return filed by employer on behalf of employee is completed from A.
Sir, please, we
That
can't hear you.
completed from A is called income tax return filed by the employer on behalf of employee. I'm stating out the content. What is the content of annual payee return filed by employer on behalf of employee? Can you hear me? Hello?
Yes,
Sir,
sir.
your line is off and on. Maybe it's your network.
Maybe it's network. So annual payee return filed by the employer on behalf of employee. What are the content of annual payee return filed by the employer on behalf of employee? Number one, I said completed from A. Completed what? From A. This completed from A is called income tax form return. Completed from A is called income tax return. While number two is called Form H1. Number two is called what? Form H1. The Form H1 is called Annual Income Declaration. I'm stating out the content of annual payee return. Number two content of annual payee return filed by the employer on behalf of the employee is Form H1, Annual Income Declaration. Number three content of annual payee return is schedule of tax deduction from employee. Schedule of tax deduction from employer that contain the following information. Schedule of tax deduction from employer that contain the following information. The name of employer. Second, the tax identification number of the employer. Tax identification number of the employer. Third, the name of employees. Fourth, taxpayer ID of employees. Fifth, total emolument for each employee. tax deduction. Number 4, content of annual payee return filed by we are talking of content of annual payee return. Content of annual payee return. Evidence of payment of payee tax every month. Number 5, content of annual payee return is evidence of payment of business premises. How much is business premises company pay while filing annual payee return? For a new company is 10,000 naira, while for an existing company is 5,000 naira. Another content of annual payee return, evidence of withholding tax deduction and remittance. Evidence of withholding tax deduction and remittance. This is another content of annual payee return. Evidence of withholding tax deduction and remittance. Evidence of development levy. How much is development levy? 100 naira per employee. Another content of annual payee return is evidence of development levy payment, which is 100 naira per employee. If a company, that is an employer of labor, fail to file annual payee return, they are going to pay a penalty of 500,000 naira. And I've stated out the content of annual payee return. Now, monthly payee return filed by the employer. Every month, employer of labor need to be filing payee return. How does employer of labor file payee return? By making payment, that payee that was deducted from the employee salary, employer of labor must remit it, must make date of the following month. The payee return, the payee tax deducted from the employee salary by employer every month, the employer must remit that payee to the state board of internal revenue on or before 10th of the following month. On or before 10th of what? Of the following month. Failure to file payee return is going to attract, failure to file monthly payee return is going to attract a penalty of 10% of the amount of tax not paid. 10% every month in which the failure continues. 10% of the amount of tax not paid every month in which the failure continues. That is monthly payee return filed at the employer. You know, we are talking about type of tax return. Number one type of tax return we first mentioned is personal income tax return. We now set into two: annual payee return filed by the employer. This personal income tax return is divided into two. Number one is payee return, while number two is direct assessment return. In the case of payee return, pay as you earn return. Pay as you earn return is divided into two: annual payee return and monthly payee return. Pay as you earn return is filed by employer on behalf of employee. Is called direct assessment return. This direct assessment return, it is the return that is filed by who? Self-employed persons. Those who are not under paid employment. Those who are running their own personal business, like sole proprietorship, professional, artisan, mechanic, organizer, welder, tailor, hairdresser, bricklayer. Those who are doing their own job personally, they are not working for anybody. They will file they are going to file direct assessment. They are going to file direct assessment return. What is the timeline for filing this direct assessment return? Direct assessment return must be filed not later than 31st of March of the following year. Direct assessment return must be filed not later than what? 31st of March of the following year. Failure to file direct assessment return by these self-employed persons is going to attract penalties of 50,000. Failure to file direct assessment return by self-employed persons will attract penalties of 50,000. Content of direct assessment return. Content of personal income tax return filed by self-employed person, which is direct assessment return. What are the contents? Number one, duly completed self-assessment form. Duly completed self-assessment form. That is number one. Number two, duly completed tax form. Duly completed tax form. Which is Form A. That Form A of amount of income earned in the preceding year for all sources. particulars of income and reliefs, including allowances, is another content of the personal income tax return filed by self-employed persons. Income declaration form. Evidence of payment of personal income tax. Development levy payment. Withholding tax credit notes. All these are the content of what? Direct assessment return, which is the return filed by the self-employed persons. Like I said, failure to file direct assessment return will attract penalties of 50,000 naira. We are done with personal income tax return. We are done with personal income tax return. Now, we can now move to another type of return called company income tax return. Company income tax return. Company income tax return is a return that is filed by every registered company. When a company registered, a company that are registered, they are required to file a return on the audited account within 6 months after the end of the year, or 18 months from the date of commencement of the business, whichever comes first. Company income tax return is a return filed by a registered company where the audited account is going to be submitted to the FRS within 6 months after the end of the year, or 18 months from the date of commencement of the business, whichever is earlier. We file company income tax, company file it on the profit that they make every year. Even if they make a loss, they must file company income tax. Even if they are exempted from tax, maybe because their turnover is less than 25 million, they must file company income tax. What are the content of company income tax? Content of company income tax. Duly completed self-assessment company income tax return. Number 2 content of company income tax return: audited financial statement comprising A, statement of financial position, B, statement of comprehensive income, C, statement of changes in equity, D, statement of cash flow. E, note to the account comparative figure of preceding year. Number one content of number three content, tax computation for the relevant year of assessment, which include company income tax, education tax computation, police development levy. Number four content of company income tax return, capital allowance computation. Capital allowance what? Computation. Why number six content? Evidence of payment of tax due. Now, company income tax return now is not filed manually. If you want to file company income tax return with Federal Inland Revenue software designed by FRS, that software that we use to file company income tax return designed by FRS is called Tax Pro Mass. Now, company income tax return is filed through Tax Pro Mass. We don't file company income tax return manually again. We file it with the use of what? Tax Pro Mass. Failure to file company income tax return. Failure to file company income tax return is going to attract penalties of 25,000 in the first month and 5,000 naira for every subsequent month of the failure. Penalties of how much? 25,000 naira for each subsequent month in which the failure continued. However, late payment of company income tax return is going to attract penalties of 10% of the amount of tax not paid, plus interest at prevailing commercial rates. However, late payment of company income tax return is going to attract penalties of 10% and interest at prevailing commercial rates. Another type of return that we have. Is called value-added tax return. Another type of return that we have is called value-added tax return. We know value-added is a value-added tax is a tax imposed in the consumption of goods and services. It is a consumption tax, goods and services, and it is borne by the final consumer. Value-added tax is a multi-stage tax. Multi-stage in a sense that value-added tax is paid at every stages of production. Multi-stage in a sense that value-added tax is paid at every stages of production. Producer will pay value added tax, we add value added tax to the, and it's going to remit it to FRS. Wholesaler will add value added tax, we remit it too. Retailer will add, we remit it. Value added tax is borne by who? By the final consumer. What is the timeline for filing value added tax return? We normally file value added tax return every month, and the timeline for filing value added tax return every month is 21 days of the following month of the transaction. Value added tax return must file not later than 21 days of the following month of transaction. That means the value added tax return for the month of March must be filed not later than 21 days of April. This value added tax, company remit this value added tax to FRS. Company is not paying value added tax. They add it to the sales, to the turnover. It is the final consumer that pay value added tax. Once they add it, they are expected to remit it. What are the content of value added tax return? Evidence of VAT payment to FRS is number one content of value added tax return. Number two content of value added tax return is called completed VAT return from O02. Completed VAT return from O02. Number three content of value added tax return is called schedules of VAT collected, showing the name, taxpayer identification, and the amount. Schedule of VAT collected, showing the name, taxpayer identification number, and the amount. Number four content of value added tax return: the total sales for the month. Number five content: the total purchase value for the month. Number six content: the value of goods exempted and zero rated goods. The value of goods exempted and zero rated goods. The value of goods exempted and zero rated goods. However, for some companies that deduct VAT at source, there are some companies, we call them direct VAT agents. Example of direct VAT agent: oil and gas company, bank and financial institution, telecommunication company, government agency. They are direct VAT agents. When you sell goods to them or you render VAT service to them, if you add VAT, that VAT you add, they will not pay you. They will go and remit VAT direct to FRS. And direct VAT agents must remit VAT that they deduct from their invoice not later than 14 days of the following month. Direct VAT agents, if they deduct VAT on their invoice, they must remit it not later than 14 days of the following month. Like I said, banks, telecommunication company, oil and gas company, government agency, they are direct VAT agents. When you sell goods to them, you add VAT. that VAT you add, when they want to pay you, they will not pay you the VAT. They will either go and remit the VAT direct to the FRS. They are the direct VAT agent. And anytime direct VAT agent does VAT on their invoice, they must remit the VAT not later than 14 days of the following month. What are the offenses and penalties relating to VAT? Failure to file VAT return. What is the offense? Failure to file VAT return is going to attract a penalty of 50,000 in the first month of the failure, and for every month the failure continue. So 50,000 for every month in which the failure continue. That is it on VAT return. Another type of return that we have is called petroleum profit tax return. However, this petroleum profit tax return is no more called petroleum profit tax return. It is now called hydrocarbon tax return. Petroleum profit tax return is no more called petroleum profit tax return. It is now called hydrocarbon tax return. Those are the returns that is filed by upstream petroleum operation. Those are the returns that is filed by upstream petroleum operation. At the beginning of every financial year, one of the returns that must be filed by petroleum profit company, petroleum company, estimated return. That estimated return must be filed not later than 2 months, not later than 2 months from the commencement of accounting year, each accounting year. That means by 28th of February, every petroleum company file estimated tax return. The content of estimated tax return: statement of estimated income and expenses for the period, statement of estimated adjusted profit and loss, statement of estimated tax and capital allowance computation. And the last content of estimated tax return is called computation of estimated monthly tax payments. Computation of estimated monthly tax payments. Apart from estimated tax return, petroleum companies are also required to file annual tax return. Petroleum companies are also required to file annual tax return. Petroleum company must file annual tax return not later than 5 months after the end of the year. Petroleum company must file annual tax return not later than 5 months afterwards, after the end of the year. What are the content of annual tax return filed by petroleum company? Audited financial statement. Statement showing qualified capital expenditure incurred during the year. Computation of chargeable profit and loss for the period. Computation of chargeable profit and loss for the period. Computation of capital allowance claimable for the period. Evidence of payment of final tax, which is 13 installments. Petroleum profit tax return petroleum profit tax is paid on an installment. Petroleum profit tax is paid on what? On an installment. They pay it on installment. They paid 13 installments from 1 to 13 every month, starting from the 3rd month of the following year of the accounting year. They will start paying petroleum tax return, petroleum tax installment. The first installment of that accounting year, while the last installment, which is 13 installment, is going to be paid by end of 5 months after end of the accounting year. What is the failure for filing petroleum tax return? If you fail to file petroleum tax return, the penalties is 10 million naira tax return. The penalties is 10 million naira in the first instance and million naira for each day in which the failure continues. Late filing of petroleum tax return is going to attract an initial penalties of 10 million naira and 2 million naira for each day in which the failure continues. This petroleum profit tax return is filed by upstream petroleum company. It's now called hydrocarbon tax. It's now called hydrocarbon tax. So these are the return filed by company. We have mentioned type of return filed by company. The first return is personal income tax return. That one is filed by employer. There is one that is filed by employer on behalf of employee. And we normally file that personal income tax return to State Board of Internal Revenue Service. We have company income tax return. We have value-added tax return, while the last one is called petroleum profit tax by taxpayer. Some of those returns can be filed monthly, while some are filed annually. Like value-added tax return is filed monthly. Company income tax return is filed annually at the end of the year. Personal income tax return, we divide it into two. We have payee. Payee means pay as we earn. Those are the returns filed by the employer on behalf of employee. This payee, we also divide it into two. There is one of annual payee return. There is one of monthly payee return. So this is what we have on personal income tax return. So with that, we can now go to part of our personal income tax computation. Personal income tax computation. We want to look at one more question on personal income tax computation. We want to look at one more question on personal income tax computation. How do we compute personal income tax? We want to look at one more question on personal income tax computation. This is for the purpose of those who are not around while we are doing personal income tax. Like while explaining personal income tax, I said personal income tax computation, we divide it into two: earned income and unearned income. Earned income, they are the income from, those are the income coming from employment and trading. Those are the income coming from employment and trading. Earned income involves the use of physical and mental effort. Is the income received from employment and service render. and it involves physical and mental effort. While on earned income, they are the income coming from investment. Example of unearned income is rent income, dividend income, interest income, royalties. We should be familiar with the format of personal income tax. This format of personal income tax computation, we should know it very well. Please, we should know it very well. So we need to look at another question on this personal income tax computation. The question we are going to look at is called, question 7. Question 7 on personal income tax. Question 7. Let's look at the question. Somebody can help us to read the question. Question 7 on personal income tax. I've shared the question already. Somebody can help us to read it. Question 7 on personal income tax. Please help us to read.
You have been approached by Mr. Shola Abija, a political science graduate who did his compulsory national youth service in a media organization in 2019. On completion of national youth service in January 2020, he was offered a part-time job as a freelance writer in 2 international newspapers. He receives an income, net of withholding tax in brackets, based on the articles he writes that are published by the newspapers. In March 2020, he joined the Popular Political Party and served as the party's temporary public relations officer, also on part-time income basis. On 2nd January 2022, he secured employment on full-time basis as senior manager, corporate affairs in Jola Investment Enterprises on a salary of 12 million per annum. Please scroll down.
Oh, yeah.
He was ignorant of the requirement for filing tax returns and paying tax to government. He has been served a warning by the State Board of Internal Revenue, SBIR, to desist from non-disclosure of his other incomes, failing which a best of judgment assessment may be raised on him by the tax inspector. Mr. Abija has approached you to provide the tax advisory services in respect of his income tax compliance requirements and the likely tax liabilities that may be imposed on him by the SBIR. The following additional information has been presented to you. Notes: 2022, 2021, 2020, emolument 8,250,000, benefit in kind 3,750,000, other income, part-time writing 3,875,000 in 2022, 3,293,750 in 2021, 2,149,388 in 2020. Public relations 2,575,450, 2,189,133.35, 1,641,849.55. Other deduction: withholding tax suffered at source, part-time writing 193,750, 164,687.50, 107,046 naira and 90 kobo. Public relations 128,772.50, 109,456.65, 82,092 naira and 45 kobo. Other deductions: pension contribution 660,000, National Housing Fund contribution 206,050 naira. In January 2022, Mr. Abija took a life assurance policy on his life with a capital sum assured of 5 million naira and paid an annual premium of 375,000. Note 1. Benefits in kind. Official car costs 2,500,000. Driver's allowances 1,250,000. Note 2. Other incomes. Freelance income gross 4,068,750, and 3,458,437 naira and 50 kobo. 2,247,985 naira. Public relations income gross 2,704,222 and 50 kobo. 2,229,590 naira. 1,723,941. You are required to A. State the difference between employment income and part-time income. B. Explain why, when, and to whom taxpayers are expected to file income tax return. C. Explain the circumstances that may arise to cause a tax authority to raise a best of judgment assessment. D. Compute the tax liability on Mr. Abija's total income.
Thank you very much. The first question said we should differentiate between employment income and part-time income. Employment income means full-time income. We are asking us to differentiate between employment income and and part-time income. Number one difference between employment income and part-time income is employment income is a contract of service. Is a what? Contract of service. Why part-time income is what? Is contract for service. Part-time income is contract for service. Employment income, which is full-time income, is contract of service, while part-time income is what? Contract for service. Another difference. Employment income is assessed to tax on actual year basis, while part-time income is assessed to tax on what basis? On preceding year basis. Employment income is assessed to tax on actual year basis, while part-time income is assessed to tax on what? Preceding year basis. Another difference is employment income and salaries and wages, while part-time income and profits. Employment income and salaries and wages, while part-time income and what? Profits. These are the question A, which say state the difference between employment income and part-time income. Number B, explain why and when to which taxpayer is expected to file tax. Why Mr. Shola Abija need to file tax return? When is he going to file tax return? To which tax, to whom the taxpayer is going to file tax return? Why does Mr. Shola Abija need to file tax return? Because Mr. Shola Abija earn income, because Mr. Shola Abija derive income, and it is mandatory for every person that derive income to file what? Tax return. When is Mr. Shola Abija going to file a tax return? The question is, what are the type of tax return to be filed by Mr. Shola Abija? What type of tax return will Mr. Shola Abija file?
Monthly
Personal
tax.
income. Huh?
Oh, sorry.
Personal income tax return. Personal income tax return. And Mr. Shola Abiga is underpaid employment. The personal income tax return Mr. Shola Abiga is going to file is called payee return. That payee return is going to file the one of monthly return, which is 10 days of the following month. And is going to file the one of annual return, which is 31st of January of the following year. File the personal income tax return. We file personal income tax return to the State Board of Internal Revenue Service. To the State Board of who? Internal Revenue Service. So Mr. Shola Abiga will file his personal income tax return to the State Board of Internal Revenue Service where he resides. Mr. Shola Abiga is going to file his personal income tax return to the State Board of Internal Revenue Service where he resides. Number C, what are the circumstances where there may arise a tax authority to raise a base of judgment on a taxpayer? What are the circumstances that may arise or that will cause tax authority to raise a base of judgment on a taxpayer? Number one is when the taxpayer fail to file annual return as at when due. When the taxpayer fail to file annual return as at when due. Fail to provide relevant information required by the tax authority. When the taxpayer failed to provide relevant information required by the tax authority. Number three circumstances. When it is in the opinion of the taxpayer should be
Sir, please
assessed
come again. We didn't hear that part.
base of
We didn't get
judgment. Is in the opinion. When it is in the opinion of tax authority that taxpayer should be assessed based on base of judgment. We are looking at circumstances where a base of judgment will be raised on taxpayer. Number one circumstances is where the taxpayer failed to file annual tax return. Number two circumstances is where the taxpayer failed to provide additional information on the tax return file. While number three circumstances where the taxpayer, when the tax authority is in the opinion that the taxpayer should be addressed, should be assessed based on base of judgments. These are the circumstances. So number four question is we should compute the tax liability of Mr. Shola Abiga. Look at this question. We are given 3 years information, 2022, 2021, 2020. The question is, which year are we going to compute tax liability on Mr. Shola Abiga? Which year are we going to compute tax liability on? You know, emolument means salary. Benefit in kind too is an employment income. Employment income is assessed to tax on what basis? What basis do we have? Actual year basis. So in this question, which one is the actual year basis among them?
Emoluments, benefits in kind.
Which is 2022. 2022 is the actual year basis. Emolument, benefit in kind is for Mr. Chola Abija is going to be based on 2022 year of assessment. The first information given to us on this Mr. Chola Abija is emolument. This emolument is how much? 8,250,000. 8,250,000. That is the emolument. If we want to compute tax liability for Mr. Chola Abija, we divide the income into two: earned income and unearned income. Under the earned income, we have employment income. One of the employment income that we have is called emolument, which is 8,250,000. Who can tell me the second employment income that we have?
Benefits in kind.
Benefit in kind. How much is the benefit in kind?
3,750,000.
The second employment income that we have is benefit in kind is 3,750,000. This 3,750,000, we are giving the breakdown in the additional notes. Where is the breakdown? Note 1. Note 1. They give us the breakdown of benefit in kind. You can see note 1. The breakdown of benefit in kind is given to us. What is the breakdown of benefit in kind? First is how much?
Official car costs.
Official car costs 2.5 million. Why the second one is how much? Driver's allowance costs how much? 1,250,000. If we add official car and driver's allowance together, how much is it giving you?
3,750,000.
That, look at this benefit in kind, 3,750,000. You can see the breakdown. The breakdown comprises of official car and driver's allowance. If you are giving official car as benefit in kind, how much are we going to recognize as the amount of benefit in kind? If you are giving official car, how much are we going to recognize as amount of benefits in kind? Who can tell me how much are we going to recognize?
5% of the cost.
5% of the cost of the assets. 5% of the cost of the assets will be recognized as benefit in kind. That means 5% of the official car cost is going to be recognized as benefit in kind. 5% of 2.5 million. 5% of 2.5 million is going to give you how much?
125,000.
125,000. For the driver's allowance, how much are we going to recognize as benefit in kind for the driver's allowance? You are giving driver's allowance means support staff. You know, we classify benefits in kind into three: accommodation, other assets, and what? Support
Domestic staff.
Which is domestic staff. The annual salary paid to that domestic staff will be recognized as benefit in kind. That means the whole 1,250,000, that is what we are going to recognize as benefit in kind for the driver's allowance. The whole 1,250,000, that is what we are going to recognize as benefit in kind for driver's allowance. That is benefit in kind. 1,250,000. Let's go back to the question. In this question now, we have treated emolument, we have treated, we have not treated. Other income. This other income comprises of two items. This other income comprises of what? Two items: part-time writing and public relation. Two of this income, they are part-time income. Part-time writing, Mr. Shola Abiga normally help them to write article on a part-time basis. He also serve as a public relation officer to a political party. Two of this income coming from Mr. Shola Abiga is coming from part-time job. It's not coming from full-time job. The question is, part-time job is assessed to tax on what basis?
Preceding year basis.
Yeah.
So which income we are going to take on preceding year? Which income we are going to take?
2021.
The one of 2021, which is this and this. This part-time writing, we are going to take 3,293,750. This public relation, we are going to take 133. But the question is, this amount they have deducted, the withholding 1,687.5. The withholding tax deduct on public relation is 109,456.65. They have deduct withholding tax. Anytime we are computing personal income tax, is it the net of withholding tax we are going to show in the solution, or the gross? Is it the net or the gross?
Gross.
It is the gross. Anytime any income attracts withholding tax, while we are solving the question, in the solution, we show the gross, which means that income before deduction of withholding tax. The gross income for part-time writing is going to be 3,293,750 plus 164,687.5. Even in the question, if you go and look at the breakdown, they have already given us in the breakdown of note 2. Note 2, other income. Freelance income means part-time writing. The gross for 2021 is 3,458,437. For public relation, the gross is 2,298,590. They have already given us. Even if they don't give us, how do we get it? How we are going to get it is 3,293,750 plus what? What is the withholding tax deducted from it? The withholding tax deducted from this 3 million, the withholding tax that has already been deducted before we arrive at this 3,293,750, the withholding tax deducted is what?
164.
Add it together. How much is it giving us?
3,458,437.5.
Is it the same with what was given to us in the note 2? Is it the same with this?
Yes, sir. Yes, it is. Yes.
For public relations, 2,199,133 plus what? What are we plusing it with? If we add back the withholding tax, how much is the withholding tax on public relations?
109,456.65.
Add it together. How much is it giving us? Add it together.
2,298,590.
2 million. Is it correct?
It is correct.
So you can see that. Now let's go to the solution now. Freelance income, which is pattern writing. The amount we are going to show is the gross amount, which is 3,458,438. Public relation. The amount we are going to show is 2,298,590. At the end of the day, if we add all our income together, if we add them together, both together, we are going to get 15,382,028. On any income we don't have, that means our total income will still remain 15,382,028. After total income, while computing for personal income tax, after total income, what do we minus? After total income, if we want to compute for personal income tax, what do we minus?
Frank investments income.
We don't have frank investment income in this question. We ignore frank investment income. Where do we go to? We are going to less tax what?
Exempt.
Tax exempt. In this question, do we have tax exempt? Do we have tax exempt in this question?
Yes.
What are the tax exempt we have in this question?
Pension contribution.
Pension NHF.
First, pension contribution. Second, NHF. Let's look around though. Which other tax exempt do we have? Oh?
Life assurance policy.
Life assurance policy. How much are we going to recognize? Is it the sum assured or annual premium?
The annual premium.
The annual premium. These are the 3 tax exempt we have. We go and less them. We go and less them. By the time we less them, you can see we less pension contribution, we less national housing fund. We also less which one again? Life assurance policy.
Annual premium.
Annual premium. I failed to incorporate it here. I have to send correction. Annual premium. I failed to incorporate it here. I have to send correction to the chat. Do you understand?
Yes, sir.
I failed to incorporate this annual premium of 375,000. I failed to incorporate it. I have to go and redo it and send correction to the group chat. After you less your tax exempt, you are going to get gross premium. If you get your gross premium, by getting your gross premium, you are now going to less tax relief. You are going to less what?
You said gross premium. Do you mean gross income?
Gross income, sorry, gross income. After you less your tax exempt, you are going to get gross income. Abi?
Yes, sir.
If you get your gross income, you are now going to less your tax relief. The tax relief that we have is called consolidated relief allowance. Consolidated what?
Relief allowance.
How do we get our consolidated relief allowance?
Higher of, okay.
Oh yeah, continue. Higher of what?
Higher of 200,000 or 1% of this gross income plus 20% of the gross income.
In this case, which one is higher?
200,000 because 1% of this is less than 200,000.
So 200,000 is higher. Plus 20% of what?
Of the gross income.
20% of gross income. I want to do the corruption of this life assurance policy. The life assurance policy, the annual premium is how much?
Please scroll to the question. Scroll up, that's ready. Information.
I want to do the corruption. I've opened the Excel now so that
annual premium is 375,000.
$375,000. Abi? So let me do the correction now. Let me correct so that we are on the same page. Life assurance policy, 375,000. Can we see that? Can we see that? Hello?
Yes, sir. Yes,
Yes.
you can see it.
At the end of the day, our gross income is giving us how much? 14,140,778. Our consolidated relief allowance, if we minus it from the gross income, our chargeable income is going to be 11,102,622. From this, our chargeable income, we can now compute tax. First 300,000 at 7%. That is 21,000. Abi? Second 300,000 at how many percent? 11%. That is how much? 33,000. Next 500,000 at what percentage?
15,000.
At 15%. That is how much? 75,000. How much? 95,000. Next 1.6 at what? 21%. It will give us a tax of 336,000. Above 3.2. How do we get the balance? How do we get the balance? Who can tell me how we are going to get the balance and we are going to target at 24%? Somebody should explain to me.
We're going to deduct 3.2 from the chargeable income.
How do we get the 3.2?
Is the summation of
what?
Plus 300 to the 1.6 million.
300 plus 300 plus 500 plus 500 plus 1.6 is going to give you 3.2. If you minus it from the chargeable income, what is the remainder? How much is it remaining?
That's the tax due. 2459.
Not the tax due. How much is remaining? If you minus 3.2 from chargeable income of 11,102,062.
11,112,622 minus 320.
7,912,622.
That one will be charged at what percentage?
24%.
24%. The total tax due when you add 21,000, 33,000, 75,000, 95,000, 336,000, 1,899,000, when you add everything together, that means the total tax due is 2,400,000 and what? 59,029. That is the total personal income tax Mr. Shola Abija is supposed to pay. The question is, how much tax has been deducted from some of his income at source? There is at least 2 of his income that they have deduct tax at source. What tax do we deduct at source?
Withholding.
Withholding. What type of tax has been deducted on some of his income at source, and how much? Go to the question. How much on some of this income attracts tax at source? We have deduct withholding tax at source. Which income do we deduct withholding tax at source from them? Number one income
part-time writing, public relations.
How much do we deduct for part-time writing?
164,687.50.
164,687.50. How much do we deduct for public relations?
109,456.5.
2 of them, we are going to less them from the tax liability. 2 of them, we are going to less them from the tax liability. You can see, less withholding tax. That means the net tax due that Shola Abija is going to pay is going to be 2,184,885. 2,184,885. That is the tax, personal income tax is going to pay in a year. What is the monthly tax is going to pay? Monthly tax payable. How do you get the monthly tax payable?
Divide by 12.
We are going to divide it by 12. Divide by 12. At the end of the day, the monthly tax payable is going to be 182,04074. Any question on this? Any question, any issue? Any question, any issue on this? So, in the absence of no question, we are going to call it a day. By next week, we are going to move to another topic. While we finish the
Now come again. By next week, we'll do what? Sorry, boss.
If we have time, we are going to go back and conclude the taxation of partnership. Either education tax is a theory. After we finish, we are going to look at a question again on partnership. We are going to look at another question on what? Partnership assessment. After we finish the main topic we are going to do next week, we are now going to look at partnership. We are going to solve one more calculation on partnership too, as part of revision. Thank you for having me. Have a nice day. Any question, any query? Okay?
Please, can you send the complete tax material? Like the complete material with all the...
Do that.
All right, thank you.
Yes.
Sir.
for the tax liabilities, the personal income and company income tax computation, the material, the questions and solutions, please.
Okay.
So are they
I
all
will
in
do
one
that.
handout?
In one handout?
Are they all compiled in one, or they're different?
Yes, we are going to compile definitely, like other lecturers do in other subjects. We are going to do that. We need to do that as soon as possible. Even our physical students have been asking for that, which we are going to do. By venture, by this week, I'm going to do that, so that once it's in a compile, it's going to be benefit for the student, like it's scattered, unlike the one that is scattered. Thank you for having me. Have a nice day.